Welcome in Umesh Choudhary, VC and MD at Titagarh Wagons. Sir, ET paper this morning reports that Railway is set to issue the largest order of 22,000 wagons. How much do you think you can get into your kitty in this entire particular order?
So yes, it is the single largest tender that has been issued in the history of the Indian Railways for 22,000 wagons, and this is what we have been expecting for a very long time. You see, what the railways under the current government has done over the last 4 years is they have invested heavily in capacity creation, in track renewals, track expansion, signaling equipments, etc., etc. So what essentially they have done is they have built capacity. Now they have to utilize the capacity, for which they need to purchase wagons and they need to carry more traffic. So this is something that we've been waiting for a very long time, and now we finally see that this is happening, and it is definitely going to have a positive impact going forward in our business.
Last week, there was a high-level meeting held in Rail Bhavan with wagon manufacturers, which were discussing the issues relating to supply of wagons. What were the key takeaways?
Sure. The situation is like this, that for the last several years, almost 5-6 years, the wagon procurement by the railways have been very infrequent, as a result of which there was no workload available with companies like us, which is very evident from a peak of producing in Titagarh alone. Apart from our subsidiary, in the peak we have produced 4,300, 4,400 wagons in a year ourselves, and from that our production went down to 600, 700 wagons in a year because there were no orders. So the orders this year were released sometimes earlier this year, and there is always a gestation to start production because there's a lot of supply chain that has to be organized. These are all engineered products. So that gestation is now getting over. In the later part of June, the industry started supplying the wagons against the new contract, and the production will be ramped up from July. So the expectations of the railways will be more than met up. There would be the capacity with the industry is more than 2,000, 2,500 wagons a month. So to supply 2,000 wagons a month is not going to be a challenge for the Indian industry.
Hi, Mr. Choudhary. This is Nayanthara joining in from the New Delhi newsroom. Can you talk to us a little bit about Nitin Gadkari's pet project, and of course talking about Sagarmala, where you're supposed to have the railway to port connectivity? We were told how there would be orders worth 18,700 crore rupees up for grabs. Have you seen tenders coming out? What are the order inflows, and what is your company expecting, and has it grabbed anything as yet?
See, in the private sector wagon demand, there are several schemes that the railways have launched. There is the scheme called the container train operator scheme, there is the automobile freight train operator, there is the special freight train operator, and what recently the railways have restarted is the wagon investment scheme, which was in my view, one of the most successful private public partnership schemes of the railways. Unfortunately, this was stopped for we don't know what reason, about almost 8-9 years, 10 years ago. And the railways have restarted this scheme. So I think there's a lot of positive move that is happening on the private sector wagon demand creation side, and that has reflected in our order book over the last 5-6 months, which is again started execution now. So all these things, you see, the port connectivity is again capacity creation. Of course, that is very important, but the wagons have to be purchased under a particular scheme of the railways, and these.
I was actually talking to you about the Sagarmala project that Nitin Gadkari announced with a lot of fanfare. But anyway, moving on. What about your margins? We did see the margins shrink from 8.6% in FY17 to 5.8% in FY18. What would you say was responsible for that? And can you course correct that in the new financial year?
So in different companies, there were different issues. Of course, in the European operations, in Italian and the French operations, Italian was essentially the low margin contracts that we had inherited, which we are executing now. when we acquired the company, we had a basket of contracts. There were some good contracts, there were some bad contracts. What we did was, in the first couple of years, we executed the good contracts, and this year we are cleaning up by executing the not so good contracts or the bad contracts, if I may. In India, the margins are dependent purely on the volume. So our fixed cost remaining the same. Last year the volume was extremely low, but now the order books have built up very well, and the execution of that will start from the Q2 of the current financial year, and over the next 3 quarters we would be able to ramp up our production quite a bit. So we don't see that there would be margin pressures in the Indian operations. The European operations would continue to be under a little bit of a stress in the current year. Next year they should start stabilizing, and of course there is a very good order pipeline that we have, or tender pipeline that we have in the European operations. So we are waiting for some large contract to be won in the tenders. We are participating in several of them, but we are pretty confident about the European operations turning around by the next year.
Thanks so much for that, Mr. Umesh. Always good to get perspective from you.